My name is Roslyn Najiro. I am the Chief Marketing Officer at Kesha Labs Development Studio. It's a startup that's specialized in software, and we're very keen on emerging technologies. So I am keen on marketing and research, and I'm an economist, so that's what I do.
On March 17th, you're having the first Decentralized Finance Conference in Nairobi,
Yeah.
the first in East Africa. What does this mean for Africa?
Alright, so decentralized finance, what's that all about? It looks like a big fancy word.
Yeah.
But think about it. 10 years ago, we had to go to a bank, we had to queue, we had to wait for hours to get financial services, right? You had to wait for days just to get an account set up. You had to give up so much information. But right now, and today, you can open up your phone and within seconds, within minutes, you have a financial service. Things have changed, and it means that as technology becomes more advanced and as people find new ways of innovating and really just getting services to people, we're getting people at the center of financial value, not just institutions. That is the heart of decentralized finance. It's that you're bringing power to the people. And what does this mean for Africa? For many people, for billions who are unbanked, who have no access to financial services, it means that as peers, they can transact value. They don't have to wait for a bank to get to them. Because as we know, banks only have a limited reach of about 25 to 30% of the population. But among peers, you have your mobile phone. With your mobile phone, you can reach hundreds of people, and your hundreds can reach other thousands of people, really, when you think about the numbers.
So what will you
it's
be
huge
discussing
factor.
about?
Alright, so in the Decentralized Finance Conference, we're talking about finance in the technological age. We're talking about the fourth industrial revolution, cybersecurity, key aspects about regulation and law that need to facilitate this technology, protect, and the protection of people, of course, getting some of these technological platforms. And of course, awareness, really, because that's the heart of people getting to know that these options are available for them to transact value.
Okay,
Yeah.
apart from awareness, what
Yeah.
other challenges do you see in decentralized finance?
Alright, so with internet connectivity, so some of these applications, of course, require you to be online in one way or another. And with internet connectivity, it's either not accessible in so many African countries or quite costly in others. So that's a very huge challenge. But there are organizations that are working to either reduce the cost or increase the access across countries. And one institution that I know is BRCK, of course, offering public Wi-Fi. So that's something that's, of course, in the positive light. The other challenge is access to smartphones. Not everybody has or can afford a smartphone, but as technology is also advancing, then you'll have more people with feature phones just being able to access a service through USSD.
Okay.
Yes.
So what is the relationship between decentralized finance and blockchain?
Alright, so decentralized finance runs on or depends on blockchain technology. It's the same way that you have electricity being able to give you different applications, like you can use it for lighting, you can use it for cooking, and so many other things. So think of blockchain as a behind the scenes kind of thing, and decentralized finance as one application. There are other applications that people can use.
Okay.
Yeah.
Now that we are living in a world of sophisticated cyber attacks,
Yeah.
how secure are decentralized financial systems?
Alright, now back to the technology. Electricity in its first days was thought to be unsafe until it was proven to be safe, right? Now, blockchain as a technology is inherently secure. It runs on principles of math and cryptography, which you actually cannot just interfere with at will. So the tech itself is safe. The problem comes in at the endpoint of the user. For instance, someone forgetting their passwords or sharing the information in a public space or making these errors. So the errors come more on the side of the users than the technology itself.
Where does tokenization come in?
Alright, so tokenization just basically means that you're representing an asset in a digital platform that's secure. So it's very critical in terms of getting people to represent assets such as buildings or just any movable asset that you can think of, be it a car, be it a house, be it shares within the company, representing that digitally in a way that can be moved, that can be transacted, that can be shared in a decentralized manner. So that means that you're reducing the cost, you're reducing the time to transact value, and that means that you're opening up new ways of sharing value, creating value, and distributing it. So that's the heart of decentralized finance.
My name is Dribbin Ngwari. I'm I'm a partner and the head of real estate, banking, and financial services at Ashitiva Advocates. Ashitiva Advocates is a full-service corporate commercial law firm in Kenya with 3 branches in Nairobi and Nakuru.
Okay, African governments have been reluctant to endorse digital currencies, that is, cryptocurrencies. Why do you think this is the case?
In fact, it even goes beyond the African governments. Governments generally have actually been reluctant to embrace the part of digital currencies, the cryptocurrencies part, but they're very open to the blockchain part. The reason why they're being reluctant on the cryptocurrency part is because it's a virtual currency which is basically still unregulated, and it's a virtual currency which they sort of cannot have control over. So that's why they're being very reluctant. This bit of not being able to have control over presents a number of risks in terms of financial stability, consumer protection, jurisdiction issues, and even issues of apportionment of liability in terms of legal cases.
Okay, the Capital Market Authority has been positive about coming up with a regulatory sandbox for blockchain systems like DeFi. How can this be achieved?
This can be achieved, of course, in the first place where the regulator is being very open-minded about this technology, and of course, as you mentioned, the Capital Markets Authority has taken a key lead on this in terms of the blockchain technologies, because they actually realize the important use in which blockchain technology can actually be used to enhance and promote efficiency at the capital market. So how this can actually be achieved is that continued engagement between the regulator and the key stakeholders to ensure that we then come up with a form of regulation that strikes that interesting balance between protecting the consumer aspect, but at the same time not stifling the growth of this technology.
Okay, so what do banks need to do? Because now blockchain systems are becoming inevitable more than ever. How do they need to prepare for
this? The way they need to prepare for this, first of all, is to actually accept that this is the reality that is here, and it's actually encouraging to note that a number of them have actually accepted this and have actually taken the lead in terms of adopting these blockchain technology processes. If I would mention just an example, the aspect of the distributed ledger technology, this has actually been adopted by a number of banks in a sense in which they're using this in enhancing the payment system, they're using this in enhancing trade finance aspects. So for them, as I mentioned earlier, the part for blockchain is very acceptable. The part where the problem comes in is on the issue of cryptocurrency. So on the part for blockchain, they're really adopting this because they understand and they see advantages which these processes are bringing in. So what they are doing, what most of them are doing right now, is the best way forward to actually take this up and put it within their system to actually see how then this can be used to improve their services. Because again, this goes back to the larger picture of decentralized financing, because you know this entire concept of decentralized financing is actually there to eliminate or reduce the intermediaries that are there existing in the market. So if they don't adapt and make themselves in a way to fit within this decentralized financing, they'll actually be phased out. So what they're doing right now is important so as they can still reclaim a space in an environment where we have a decentralized financing system, but then we have very minimal interaction with the traditional intermediaries who then, or central processors of information, which have been banks for most of the time.
So currently, how do you approach a case where a bank's financial systems have been hacked and billions of money stolen? And in the future, how can decentralized finance systems help to cover that?
Currently, in terms of that particular aspect, there is some form of regulation because it's that digital operation, and the regulation is actually twofold. There's the aspect of the central bank regulation, and there's also the aspect of the Communications Authority of Kenya, because this is a digital platform aspect, and these are governed under two acts. There's the Central Bank of Kenya Act, and there's also the Kenya Information and Communication Act. So in the case of hacking and all these systems, it's actually a crime under the Kenya Information and Communication Act, and these systems, this whoever is found capable, these processes can actually be prosecuted there. And but at the same time, under the Central Bank of Kenya Act and the Central Bank of Kenya Prudential Regulations, there are some standards which then financial institutions are supposed to adhere to ensure that even as they embrace this digital technology and all these aspects of decentralized financing, they then meet some standards which then protect the consumer, they protect the consumer information, protect the consumer data, protect the financial stability of the financial system to ensure that indeed the consumers continue not only to not lose their money, but also to continue having faith in the financial system, which is critical in maintaining the financial system of a country.
Okay, the last question now. Where do you see the future of regulation of financial systems?
The future of regulation of financial system is actually facing an interesting prospect based on this reason. As we've been mentioning, the aspect of decentralized financing is actually taking activities from the traditional intermediaries. Now, if you look at a regulation is actually based on regulating these intermediaries who are performing the services. So when you take away these services from these intermediaries and decentralize them, you then create a lot of gap and have a process which is not covered by our existing regulatory framework. That's actually one of the challenges which our regulators are having, because they are used to that regulatory system based on these particular intermediaries. So the future where we are seeing this regulation going is actually going to be based more on activity-based and not these intermediaries, because the role of these intermediaries is reducing and more activities. So when regulation then is going to be based on activity-based, that's when how the regulators will be able to keep checking and regulating the system. And again, on the part of how this regulation develops, it's important to again put that reminder that while regulators are actually keeping on pushing to regulate this, they should strike that fine balance between protecting the consumer protection and the stability of the financial system, but also allowing for space for innovation to grow so that this development and adoption of this technology and decentralized financial system is achieved.
Think about, just as I mentioned earlier, new ways of sharing and creating and distributing value. So we have alternative savings, alternative and micro investments, peer-to-peer lending. Not that it's also on traditional platforms, but new options, of course, with decentralized finance. There will be new options also for securities, shares, and really just through tokenization of assets and being able to do cross-border investments.
Okay.
Yes.
Now I invite Kenyans to the conference.
All right, thank you. So I make this invitation now to every Kenyan who is interested in learning about the future of finance, the future of investments, and just come to learn, come meet the investors, come and connect with entrepreneurs, come and connect with thought leaders. 17th to 18th of March will be at the Safari Park Hotel. The 2 full days, you do not want to miss this. So please come, sign up, and don't miss out.